Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from Chicago on a beautiful Thursday morning. Joining me today, as always, from Kansas, Director of Feed Procurement, Mr. Jake Kingsley, and returning to the Grain Feed from Madison, Wisconsin, President of EverAg Insights, host of the Dairy Download, and overall dairy industry royalty, Mr. Phil Plourd. Team, how are we today?
Fabulous, Jim. How are you?
I'm doing fantastic. June 6th, big day. We are remembering D-Day today, 80th anniversary of D-Day. My daughter's last day of kindergarten was today. This is a big day.
She graduating with honors?
Sure. Yeah, I think so. If they do that, yeah, for sure. I don't know what we do these days. Jake, what's happening in your world on June 6th?
Well, we've got Riverfest here in Wichita, and I'm going to go downtown and get some crawfish in Wichita for the first time.
Wow. Okay. Riverfest. Fest of the River.
Mm-hmm.
All right, Wichita. Are you glad you made the move from Fort Worth to Wichita?
So far, so good.
No Riverfest in Fort Worth, I bet.
Not the same.
Phil, anything happening in Madison this weekend?
No. I mean, we had Bratfest over Memorial Day weekend, and that's a big deal.
It is a big deal.
So it takes a couple of weeks to recover before you have your next big event. So
yeah, I bet it does. Bratfest's a big one. Okay, a lot of fests, a lot of celebrations happening around the world, and a huge celebration for having this team today on the Grain Feed. So let's run through the markets page. If you'd kindly timestamp the broadcast, it's Thursday morning and markets are trading higher in at least the grain and feed markets. And that is notable because over the last couple of weeks, we've pretty much been seeing red almost day to day on the screen. So as I turn to the quote board, we have July corn is trading right at $4.50 here this morning. That's up 11 cents on the day. So one of the bigger moves we've had, especially to the upside in the corn market that we've seen in at least a few weeks anyway. We've got December corn, which had come back down to, let's say, 460 and maybe even a touch below the past couple of days, 460. December corn's now back up to 470 almost. We're missing it by a tick at the moment. So that's up about, let's say, just under 10 cents. We've got soybean meal, stubborn little byproduct, is back up just a couple bucks. Soybean meal has kind of had a nice break itself as well, and perhaps rounding out a bottom a little bit, just above 350. So that's kind of a key level we've been watching for the December soybean meal product. And then beans themselves back up again today. We've got November beans back to 1170, or at least almost at 1170 this morning. We're up about 18 and a half cents on the session. So the screens are green. We've had a lot going on in the grain and feed market in terms of these markets, I guess having some volatility removed from the marketplace, at least for the last couple of weeks. We came out of Memorial Day weekend. The corn market has been on a steady Eddie decline, if you will, over the past week and a half. And usually a steady break kind of takes the volatility somewhat out of the marketplace. So potential opportunities, at least for those dairies that are trying to step into some maybe cheaper options premium than they were able to get here a couple weeks ago. But volatility still remains in the dairy industry. So let's turn her over to Phil. Phil, there's been a lot of volatility we've had lately, maybe especially in that cheese market. What's been happening over there?
Look, we do volatility very well in the dairy industry. It's one of our specialties. Yeah, the cheese market's been bouncing around. We kind of had a rip your face off out of nowhere rally that took cheese from the 140, 150 area to all the way to $2 plus for barrels. We do that, right? If we have a problem, we don't go from 170 to 173 and a half. We go to 2. And I think that the market's been characterized by really strong exports. Just got the new export data in for April here this morning, and 100 million pounds in April was 110 in March, an all-time record. And so when we got cheap at $1.50 on cheese, we bought some exports. We shipped them in April. We shipped them in March. I think we're still shipping some today, although I expect that to tail off. It's sort of been a real interesting dynamic. So the exports, we had to have been at 150 to buy them. I think that number's moved up to maybe 170 today, just based on European prices getting a little higher. So I don't think we have to go as low to repurchase those exports. But I think the real interesting things with the domestic story. We talk about low prices curing low prices. Well, it worked on the export side, but it also sparked some activity on the domestic demand front. After Easter, we saw promotional activity really, really strong. A 25% uptick in the number of stores promoting shredded cheese, for example, in the 6 weeks immediately following Easter. And pricing was down at one point in April. Pricing was down to the lowest promotional prices in more than 2 years. And so after kind of lackluster promotional activity on cheese, all of a sudden the retailers lit it up. We have Walmart rolled back prices, the EDLP, by 11%. Lots of other grocers competing with that with promotional activity. For 6 weeks, we lit up sales pretty good. And then the other thing that's going on that's part of this sort of macro picture, a lot of chatter about restaurants and restaurant prices, especially in the fast food sector. And given the overall constraints on consumers somewhere from the middle class and down, shockingly high restaurant prices in the opinion of some, and interfering with volumes, the restaurant sector has been slumping. And you've seen, in quick succession, McDonald's, Wendy's, Burger King, others say, hey, look, we got to recreate some value meals or some sort of deals here to attract especially lower income consumers back into our stores. And so, we're starting to see those things pop up, at a time when prices have been low on cheese. So that's been helped grease the skids, if you will. Really curious to see if the whole thing has legs. This week, we saw a collapse in cheese promotions. Could be just post-Memorial Day. I don't know what's going on. Prices up, promotions down. Some of these restaurant deals are short-term. I think the McDonald's thing is a month, at least initially. Now they may stick with it. And we continue to see evidence that the consumer is feeling strained. Last week, we got income and expense data, the personal savings rate, which measures basically the distance between income and expenditures. That number was down 0.6%, way below where it was a year ago. Real disposable personal income, which is a sort of an inflation-adjusted measure of how much money people have to spend, that was up only 1% year over year in April. That was the lowest reading since December of 2022. And so while we have all these stories about inflation receding and the headline numbers are down, the stacked impact of cost increases in 21, 22, 23 has really put a whooping on consumers. Food prices are up 20% since 21. And so on a 3-year basis, we haven't seen this kind of inflation since I was a youngster. And no one remembers the late 70s, early 80s fondly from an economic perspective. And we're still kind of there today. And so long way of saying that the cheese domestic demand situation is really important. The export's going to go back and forth based on flow and competition. I thought for a few weeks that, hey, we've got hold of something domestically. I just wonder how fragile it is given, the whipsaw in prices as well as the overall macro environment still seems vulnerable. Not a disaster. Upper income people doing just fine, but, sort of the 80%, outside of the top 20%, let's say, still a struggle out there, and that matters, I think, in the restaurant space especially.
Yeah, I think it matters 100%. And I mean, just from a personal perspective, we've made a very poignant decision to continue to try and eat as much at home if possible. And we've noticed some of the promos as well coming from fast food. My daughter is at a reading level probably that exceeds mine. So she's very quick to point out some of the value meals that are being broadcasted out there. But yeah, it impacts everyone significantly, especially as now, we talked about it a few times now, but kids are now out of school. We're supposed to be heading into the summer. It's very interesting to see the crude oil market as of late, I think beginning of this week, kind of fell out of bed.
The gasoline prices are about 3 or 4 cents lower than they were a year ago.
Yeah, so that element is going to be really interesting because we're now going to hit peak driving season. Certainly peak barbecue season is upon us. So a lot of sliced cheese being purchased at my house at the moment, but it's going to be an interesting stretch. So I guess in terms of how this all impacts milk pricing itself, we've had a nice little run up in milk itself as of late. Yesterday, perhaps on Wednesday, not as much, but we've had a lot of conversations with dairy producers over the last week or so of like, hey, Jim and Jake, I've got my feed down, I've got my milk up. What do I do with these types of margins? So Phil, what are we seeing on the milk price itself?
Yeah, we've had $20 plus class 4 futures because of butter strength for a while, but we've seen this revival in class 3 where we have $20 prints out there. When you look at margins as we calculate them using the DMC model on a 12-month forward look, they're at the highest level since July of 2022. So, pretty good margins out there based on the higher class 3 prices in class 4 plus the lower corn and meal prices. So I think that there's something to capture there. I think the big question is, it's very tempting to say, well, thanks for the 20. Let's see if we can get to 22. We're on the front edge of summer. There's not a lot of cows out there. It gets hot, all those things. And I don't think that's an unreasonable hope. But, one of our sayings around here is hope's not a strategy either. And I don't know. I mean, I don't know that this cheese market has the wherewithal today to hang on to $2 plus pricing for weeks and weeks and months on end, because we lose the exports at $2. And so at some point that cheese washes back into our market and creates some trouble. I think the range has shifted higher from, let's say, $1.50 to $1.80 or 75 to maybe $1.65, $1.70 to $2. I just don't know how much more we can hope for or expect beyond these $20, $21 prints we're seeing in class 3, especially if you're working the feed side of the equation. We're talking about pretty darn good profitability on paper. Not every farm, not every region, all the usual caveats. But on paper, it's an environment that some dairy farmers, I think, are leaning into, because they're like, well, hey, look, we haven't seen a $20 print in class 3 for a while. These insurance prices or whatever I can lock in are pretty tasty. You're not making that hard choice of, do I lock in a loss? And so I think we are seeing some people roll out with that. Again, every situation is different, but in a vacuum, it doesn't seem like a terrible idea, because I'm just not 100% confident that we're on the front edge of a rocket ship ride even further on the milk side.
Okay, understood. Thank you for that, Phil. And then, Jake, I think this is a perfect transition into you, because we've been on a lot of these calls together with some of our farmers this week, and we've had a handful of those comments about how, hey, I actually do feel like I have a margin for the first time here in maybe a couple of years, or at least one of my better looking margins perhaps in a minute. And so we've had feed come down, as we've discussed, and we've had some dairy pricing at least on the rise for the time being. And folks asking you, Jake, when do I step in and own some of this new crop stuff? When can I step in and start hedging? But I think some of the items that you're looking at, Jake, are, hey, first things first, let's wrap up planting here in the Midwest. We're getting close. We're not quite there yet. And then we got to enter our key summer development seasons then for both our corn and soybean crops. So what have you been seeing on the feed side of things, Jake?
Yeah, I think we're starting to see some opportunity to step in some fashion or another. It's very regional, but there are spots in the Midwest that have kind of wrapped up their planting, and we're seeing corn basis numbers get down to our target areas. They're near historically average ranges, even some of them getting a nickel or a dime better than where we were hoping they would go. We've seen some dairies step in and own basis, or even own a little bit of physical for new crop and consider getting some very cost-effective puts underneath of that. We're starting to think about that pretty consistently at the other end of the rail line. As you said, we've got some folks that are saying, hey, I think I can pencil out a profit for the next 6-12 months here. Let's not miss this thing. And they're either putting some very inexpensive call strategies above corn market as it has dipped here, or thinking about just jumping in, getting some physical bought and getting some puts under it. I think we're close. We've been 20-30 cents away from our basis targets for a lot of these folks. You get down to $4.50 futures, and people can be pretty happy with corn prices at those levels. So we've seen some action here in the last few days. I suspect as more of the grain belt wraps up planting, we clipped the 90% mark earlier this week. So we're all but done there. We may see another move lower in both basis and futures as grain starts to move back into the commercial pipeline, as these folks are getting out of the field and back in a truck. It's time to be ready to act in that space. Protein's been a little less favorable, actually considerably less favorable, if we're honest. Continued strong purchasing by China, Western Canada canola has propped up that market to a healthy degree. We still have concerns around a rail strike. Canadian railroads up there making logistics a concern. The decrease in crush margins has again pushed a lot of these crush plants here in the US to take extended shutdowns to do repairs and maintenance. And so all of those things compounding have created quite a squeeze in the protein supply here domestically. The fundamentals remain very healthy from a feed buyer perspective. So this is expected to be short-lived, but it's hard to say is short-lived 30 or 60 days, or is it 90 plus days as we move through the summer and these guys just kind of run at a very moderate pace until we know we've got a crop coming, but we're still expecting very nice soybean acreage and increased crush capacity as we move into late summer and into the next crop year. So the opportunity will be there. For those that aren't bought up on protein, they're going to have to weather a little bit of a storm here for a few more months, but the opportunity will come. I think that's just going to take some time. Another one we've been kind of watching here has been the cottonseed market, putting some pretty aggressive targets in place for the new crop window with the expectation that acres would be up and we get some sort of return to normal yields, particularly in the western half of the U.S. Cotton futures have now dropped down into the 70s, which is starting to get pretty thin, if not negative margins for cotton producers. And so we're seeing some of those folks that are in the middle of planting or just getting started potentially changing their plan on what they do with that acreage, going to something else. We've also had a fair bit of hail move through the plains, and that's kind of beat up some of those acres that were already in the ground and popping up. So we're keeping a close eye on that to see if the calculus changes and we need to readjust our targets. Nothing to do there yet today, but it's something that we're keeping an eye on.
Okay, awesome. Thank you for that, Jake. Really interesting conversation, especially before the recording around cotton, because you have been talking a lot with folks around the country on, at least it looks like things are aligning for that new crop cotton seed pricing to ultimately come down and remain under pressure. But of course, that is derived from the cotton crop itself. So watching those futures very closely. And just like any other commodity that we are producing here, once you get below that cost of production, people start to switch up some of their decisions. And I think that also leads into the report we're going to get at the end of June, is when the USDA updates some of its prospective plantings numbers that we saw at the end of March. As we touched on last week's show with Verl, there's going to be a lot of decision making that was done, throughout that very wet streak of April and May in terms of what folks did or still plan on doing ultimately with their corn or soybean crops. So it affects all the planted agricultural commodities here that we're tracking across the markets. And we've been very delicately trying to balance out the idea of being patient versus the idea of being complacent. We like being patient, but we can't sit too much on our heels here as we move into the summer. And we've seen now what was a week and a half long dip in the corn market is now followed by a 10-cent gain here this morning. So not saying anything has gotten away from us for the time being, but it's important to remember that we can have changes. And even though the stars were aligning for the cotton crop and the corn crop and whatnot, and we still have to make sure we have our protection on. We're managing that risk. So keep ourselves patient if we want to on the physical side, but let's protect that with some risk management strategies as we move forward. So it's going to be an interesting summer, but at least we get to start that summer with Phil and Jake on the show. So a huge thanks to you both for being with us. Great work today. We'd also like to thank the Everag Insights crew for their support. Thank you to Paige and Lexi for their production magic. And thank you to the viewers for watching the Grain Feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed.